What is call spoofing? Have you ever received a phone call from what seemed like your bank, only to find out it was a scam? This is where call spoofing comes into play. Call spoofing is when a scammer changes the information that appears on your caller ID. This makes it look like the call is coming from a trusted source, like your bank or a government agency, when it really is not. The main goal of call spoofing is to trick you into giving away sensitive information, such as your passwords or bank account details. For banks and credit unions, call spoofing is a serious security issue. Fraudsters use this tactic to impersonate financial institutions and deceive customers. These scams can lead to unauthorized access to your accounts, financial losses, and even damage the reputation of the institution involved. So, how does call spoofing work? Scammers use technology to alter the caller ID information that is sent during a phone call. This means the call can appear to be coming from a legitimate number associated with your bank or credit union. During these calls, you might be urged to provide confidential information or confirm account details, which can compromise your security. There are different types of spoofing that are relevant to banks and credit unions. The most common is caller ID spoofing, where the scammer changes the number shown on your caller ID to mimic the bank's official number. Another type is SMS spoofing, also known as smishing. In this case, fraudsters send text messages that look like they are coming from your bank, often containing links to fake websites designed to steal your login credentials. Website spoofing is another tactic, where fake websites are created to look like the bank's legitimate site, tricking customers into entering their personal information. To combat these threats, banks and credit unions must educate their customers about the risks of call spoofing. Here are some important tips to keep in mind. Never provide personal or account information in response to unsolicited calls or messages. Always verify the caller's identity by contacting your bank directly using official phone numbers. Be cautious of urgent or threatening language that pressures you into quick action. If you receive any suspicious calls or messages, report them to your bank immediately. From a fraud prevention standpoint, financial institutions implement monitoring systems to detect unusual account activity that might result from spoofing scams. They also work with regulatory agencies and telecommunications providers to help identify and block spoofed calls. In summary, call spoofing is a deceptive technique used by criminals to impersonate trusted entities like banks and credit unions. By raising awareness and advising customers on safe practices, financial institutions play a key role in preventing fraud and protecting your accounts.